The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento.
Hi folks, Basil Chapman sitting for Larry Pesavento, and fortunately I just happen to have this hour I've made free because it's such an important day to be able to look at the charts and continue our education here at TFNN. Don't forget tonight, Wednesday night, for those of you of timing the charts, that the art of timing the charts, the program that was developed via Tom's book by Dave White, that's going to be on for those of you who are already, I think, for $1 or something pathetic. I mean, $1, give me a break, for a whole month of the timing the trade, that to find out where the Gartleys are on all these things. It's a fabulous thing. I have it myself. It really does help siphon out which stocks are worth looking at, worth amongst other things that I look at. It's really great to have. So, now, let's just do this because I want to look at the dollar. I want to show something interesting about the dollar. Well, let me just say, for those of you just tuning in, the Dow is up 195. It was up over 200. It's at 15,363. The S&P is up 22. I like that proportion. The Dow is up 1.29%. The S&P is up 1.32%. I like it when the Dow 500 stocks are slightly ahead in percentage terms of the Dow, and in this case the S&P is at 1720. The composite index, and this is very interesting. I just had a question before about in the Chapman wave methodology. I always like to look at peak A, peak B, peak C, peak D, 4 higher peaks, and then other things can happen. And the question was, in the 120-minute, where are we? Well, we're in leg D, about to make a peak D in the 120-minute chart if there is no high above 78.83. No. If there is no high above 79.82, because you need that 1 penny difference to make a peak from the previous high bar. So, and the technicals are good. The MACD is really strong, but the stochastic saying to me, hey, I'm a little bit extended right here, but it's the daily chart that is the big question. It's this old leg F, which says, hey, you got to be careful, with a brand new A, which says you've got at least a week or more of upside activity. So let's just do this one at a time. So I wanted to go back to the dollar because Larry has a show called Trade What You See, and I think that, and a week ago, exactly this time, Larry was talking about being the most bullish he has been in just such a long time, and that he couldn't believe it, but everything he was pointing to was pointing to a big move to the upside. Now, I have to tell you something. A move from 14,700 to 15,370 is not a small move. It is a big move. So, bravo, Larry Pesavento, for a fantastic call. My honor to be sitting in this chair right now. So the dollar is in leg C. But wait a minute. The whole thing is that ugly candle of the 18th of September, where it opens as 81.15, it squeaks to 81.22, and then whoosh, down to 18.06 and closes at 80.24. That ugly candle, that's the challenge. I believe that the dollar is able to close above, I would say 81.22, but it really is the bar before. It's 81.35. A close above that, where there was a little bit of a gap from the previous 81.40 to 81.40 to 80.97. That gap, so that makes 81.40 a really important level to be monitoring on the dollar. If you look at the monthly chart, it's broken key support, but the month is not finished. If it gets back into that support, if on the last day of October, that's the last trading day of the 31st of October, that is that Halloween? Yeah, that's Halloween. If in fact the dollar is able to climb and close above 81.40, 81.35 is the 9-period moving average support. But if it's able to close above 81.40 or even higher, that'll say, whoa, you just saved the day, because that was looking very ugly. And it means that the inverted candle with a possible peak F in the Chapman wave, I don't want to get too complicated since this is Larry's show, but the high of July of this year, 84.75, that inverted Roman candle becomes a target to the upside. So slowly but surely, we'll be looking at this to see what happens. Now, I shouldn't say slowly but surely. Who knows how the dollar's going to trade? I meant the improvement is slowly but surely. Now, what's important is that the weekly chart, the stochastic's turning around that lower. If you're looking at my charts, that middle one is the stochastic, slow stochastic. And even more important than the slow stochastic, you want to see the price move above 80.90, because that's the 9-period moving average that has been under since it broke down the week of the 13th of September. So you want to see a nice U-shaped turnaround here, and then all of a sudden I can introduce this concept with the ellipse on the left side, that lower arch. Oh, what is it called like a boat? The left side hull or whatever it is can start to make a curve so you can get the cup formation. So the dollar's attempting to make some kind of a low here. The MACD in the daily is 73%. At leg C, I really like to see it at 80% or higher. That's really important. So that's what I'm looking at right now. Now, let me just also tell you, my service is called the opening call. Normally, I discuss the currencies, the bonds, I discuss gold, etc. I don't always have positions on these things. We're usually looking at stocks or ETFs or whatever moves in the whole stock area or index area. But we do take positions in sometimes a gold ETF or, it could even be TLT or TBT periodically. Haven't done so for a while because the TLT has just been stuck in a trading range. But now let's look. Here's the dollar. Let's look at the what is normally EUR-USD. This is the currency pair. Now, in the euro-dollar currency pair, what's really happening is that you've got an extension to the leg C. I've drawn a little circle. Well, it has to move now because it's the next day. But it's this area. And this area says that if the euro is down 0.003 at 1.348, if the euro tests 1.346 and then breaks that, then what we're looking at is that area of 1.34613 back on the 25th of September. That low is going to be taken out. And the candle that I was talking about, the dollar, you remember that terrible red candle, is the beautiful green candle of September the 18th to the upside in the euro-dollar currency pair. Euro-dollar means that it's made up of various currencies as well as the dollar. So now look at this. You've got the stochastic week, MACD week, daily. Weekly, 89% for the stochastic. Hey, that's still pretty good. MACD just flattening out there. Look at those histogram bars. Still very good. Way above the 0% line. So far, although my weekly chart says that there's a left side, right side potential price match towards the 1.34643 high of the week of the 1st of February, it's gotten close in this what I call leg F to the upside. Can there be a G? Yeah, there can. If there's a new high above the high of the week of the 4th of October, 1.36452, I'm going to call that C. And what's so fascinating about that, if it happens, look at some of the indexes. Now, I don't want to mix things up. Let's just stick with this for the moment. The monthly chart in the euro-dollar currency pair has severe resistance from where it stopped just recently all the way to 1.38. Why? Look at that trend line. Look at that distance there. That what I call the inside track repellent zone. That is going to be a lot. That's going to mean a lot. Because if it's able to break out and hold above 1.39, that's going to be very positive. Those are the ifs. Right now, it's bumping into resistance. That's the way I'm going to look at it. Prove yourself, and I'll say that it's broken the resistance. There's the cup formation. It's almost completed that. Will it test 1.34 to hold the 9-period moving average? Take time as the dollar moves up, maybe to a leg D? I don't know. We'll see. All right, now let's go back to our story. In the TLT, that's the Lehman 20-year T-bond fund, it failed to hold a support level that would have given it a chance to make the a cup formation from a higher level. It could still do that. But more importantly, right now, it's got a pattern in the daily that says, I've got two trend lines. And it's so nice when you're able to, when you learn how to use a single trend line. Now, most software packages might not be able to do the arches, but you can always do the trend lines. Grab the bar, grab the pointer, and go to the previous high peak. Just touch it, and then see how many times you can hit. I like to go to the upper wick high or the lower wick low. That to me is important. If it does cut into the body, fine, but I prefer just to go to the wick highs and see how many I can hit on the upside. And on the downside, I like to look at the lows. And if it cuts into the body, that's fine. It's just a guide. And in this particular instance, I'm going to go to the lows to show something. You've got a pattern that I call the falling axe. It's a declining cone, expanding cone formation. And that says the bottom testing of the support line in this particular instance for the TLT will be 104. Today it'll be 103.96. Tomorrow it'll be 103.89. As the MACD dips a little bit, stochastic looks very poor at 18%. The price has actually held quite well considering how much the stochastics pull back, but the real issue is you are not seeing a flight to safety in this particular instance because money's coming out. I'm almost sure about it for weeks and weeks. Money's been coming out of bonds and going into stocks. And that's the reason why I'm looking at higher highs and higher lows. But I suspect we're still going to get a pretty choppy period coming in this October-November phase. More importantly, right at this particular point with the market acting like it is, we are looking at leg B in the Dow, a leg A still in the S&P. So it's those support levels that are going to be absolutely key. But looking out on my monthly charts, I suspect that we will rally, regardless how deep any correction will be. And there will be a correction. We're going to go to higher highs over a period of months going into early 2000. That's my outlook. Now, let's talk about some other things. When you're looking at, I did this in the previous hour, I'll do it again. When you're looking at natural gas, I love the action of natural gas. It's still good. I've been talking about it for weeks. I love it because if you look at the continuous contract, and I know there are a lot of people who say, how can you look at the continuous contract? It's smoothed out, it's an accurate representation. All I can say is that's what I use. I use it for years and years and years, decades. I'm going to keep using it until it fails. And it says to me that the natural gas contract has a chance to make this 8th pattern. I'll talk about what happens in a moment when I get to that. We'll be back. Basil Chapman singing for Larry Pesavento. Dow is up 202, S&P's up 20. 877 97 648. I'll give you the call.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls. That's what my used to say. That's what Larry always says. Basil Chapman, sitting in for Larry Pesavento. My service is the opening call, a very comprehensive daily look at the market, plus parameters to look at. And we have buys and sells and whatever it is. And just trying to ameliorate any whipsawing around here. We were trying just to stay on the long side with some stocks, and that's what we've done. They seem to be doing fine. And we did have 2 shorts. We got taken out for a tiny loss, but that's the way it is. And we're left with our long positions, and this is the way to be in this particular market right at this time, which is October the 16th at 12:25 Eastern Time. So I wanted to do a couple of things here. I'm looking at the natural gas. This is the continuous contract. It's made the U-shaped pattern or V-shaped pattern right back to the 200-period moving average. And my suspicion is that based on the NGZ, based on the December contract, which is only in, whoops, where did it go to? There it is. NGZ in leg C, what is it, peak C, $4 and $4. No, $4 for 3 days, $4 high. How does it do that? I haven't seen that before. It's just stuck there at the highs. So I'm looking at this 200-period moving average right here at the 399 level, and I'm suspecting that even if natural gas, I love natural gas, but even if it goes a little bit higher to actually make D, which will be probably E in the continuous contract, but leg D, see, from the lowest low bar of 3.751 back on the 26th of September, it's gone peak A, peak B, runs up. This is called the floating ladder until it makes a peak, which it hasn't done yet. So I'm suspecting it will make a D, and then it's going to test between let's call it about 404, maybe 405, and 3.92, maybe 3.89. For a little bit, maybe. So I'm expecting that within about a week or so, after a little bit of digesting, whipping up and down, the 200-period moving average will become a support. Natural gas will push higher above peak B, which in fact would be above 4.041. That's that. Now, couple of things that I want to look at. Question originally was on Facebook FB. Facebook, funny how many patterns are repeating. Look, Facebook has this pattern that I love to look at. This is the V-shaped pattern right there, number one. But within that, I'm going to make this a little darker so that you can see what I'm really looking at. This is a pattern that I call, MICD, introducing the Chapman Wave methodology. There's a pattern that I nicknamed it the falling axe. It just looks like an ice cream cone on its side. So it's an expanding wedge. And in the CD, which, let me just go to chapter 24. Right there, chapter 24. That's the pattern. Right there. Right there. And that pattern is potent because as soon as it breaks out above the left side, in this case, let me go to the next slide. Right there. As soon as it breaks out above the left side resistance, it takes out each successively higher peak. Now, if you look at what's happened here is that the high of Facebook, the high of 51.29 on the 7th, that's the challenge that's coming up. If it takes that out, immediately the high of 51.63, the all-time high, will be coming to focus, and that will give you leg D up in the weekly chart. That's what I'm anticipating. It will extend leg B up in the monthly. Monthly chart looks absolutely outstanding. Facebook is a stock that is at 50.51. My suspicion is it'll be at 50.51 in about another 4 months' time, or maybe 5 months' time, except it will have split 2 for 1. I like the stock. Leg B up in the monthly chart, so that's to go to D, very positive. Any major pullback under terrible circumstances, and this thing gets towards the 42 to 39 area, I think it's worth starting a position. So that's Facebook. And the other question I had was, if I can just move back up here. I see, that's where I typed it. It disappeared. CHK. CHK, that is in the oil sector, right? Energy sector. Oh, look, CHK, Chesapeake Energy. When this thing flies, it flies. It's trading at 27.39, up 89 cents, up 3.32. This is leg D. So let me just quickly do the notation here. You see, this is where the Chapman Wave, there is a question. But it's a question that doesn't necessarily have to be answered. And in this case, it's F/B. In the weekly chart, it's in leg C in the monthly. So until you start to get negative activity, you just treat this as if everything's good. I don't have to make a decision on the wave count right now because everything's good. I'll be back and we'll talk about CHK, Chesapeake Energy, because this is a fascinating chart. Another one of those couple with the V-shaped patterns going to the previous high. Wow, interesting. I'll be right back. Basil Chapman, sitting in for Larry Pesavento, 877-927-6648. Why that?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. My pleasure to be here. Dow's down up 178. S&P's up 20. Sudden blip over there. Some eyebrow must have been raised. I must tell you this on a really short-term basis. I wonder if we're looking at a buy the news and a possible sell, buy the rumor, sell the news situation. It's just something's going on that seems to me a little awkward. I don't know how to explain it, but just on a real short-term basis, I'm just wondering if people haven't gone a little too carried away here. Doesn't matter. We'll see what happens. 24.75, 27.46. And the high is 27.41 on the chart we're looking at of Chesapeake Energy. And it's just been a spectacular stock. So this is gray C right now. If it goes above 27, what did I say it was? 27.46, yep. 27.46, immediately I have to consider that it's because it's only had a small dip. It hasn't gone all the way back to the original trough A. What I'm looking at is a chance that if in fact it does make a new recovery high above 27.46, I have to call that G/6 just for the moment. Stochastics at 73, MACD's just turning up. The other signs that are actually very positive. I need to draw this in so you can see this beautiful cup formation right there. Now, I didn't ask if you were long or short, Jane. The Den asked me. But this, as I say, the weekly chart is still very strong. Now, what's fascinating about this whole thing is that the monthly is making another one of those cup formations. And that cup formation says it's over and above the resistance at 2609 from March of last year. The candle that I'm looking at is a long-legged doji, not really a doji, but it looks like a doji, that says if at any point the 2817 area is reached, then there's a chance to try to take out or touch the 2985 high that was made back in November of 2011. Now, that's very important. Why? Because the MACD is at 90%. In fact, the MACD of the monthly chart is stronger than daily or weekly. That's the tide it's saying is going up. So to answer your question, I like it very much. I'm not sure you're in it. If you are in it, I would say that the resistance level that we're looking at right now on a short-term basis, 2746, says it could pop above that, but then it could digest that and make another smaller cup formation. Support is at the 2680, it's at 2720, 2680 to 2653. That should be the support as I'm looking at it right now. Very nice looking chart. There's another pattern I'm looking at that might unfold and says if there is any choppiness over the coming week and a half without decisively taking out 2780, you could go into this oval pattern that says just I'm going to whip around here for a little bit before I finally break out in the 28s. So not supposed potential buy. Okay, so that was the question there. Another question was Facebook. Let me just go back on. I did Facebook, right? Yeah, I did Facebook. That's the same V-shaped pattern, looking like it wants to try to trade above 51 round number high of yesterday. Breaks 51 round number high. It's going to be important now. So Facebook, once again, nice choice, very good eye. I like it. I'm going to do something else, and I'm going to suggest two things. One is that we look at stocks that have had absolutely spectacular runs over a period of a few years. And one of them I showed to my subscribers this morning was Whole Foods, which made a round number high yesterday of 62. What I'd say is if it took out 62 and went into the 63 and a half actually is the level, that would say that not only has it broken resistance, but it is turning former resistance into tremendous support. And that former resistance is that whole area of the 57, 58 to 55, 56, 54 area. So what I'm looking at here is Whole Foods broke out today, very strong move. Now the stochastic is at 93%. At 93% with the MACD still strong, it says this might be called leg D, but there's a really good chance that it could cycle all the way up to an E and an F, and then maybe pull back. So that's a very strong move for Whole Foods. We had no position. I just said, I wanted to look at this. I want to see how it holds. If it does break under 63 today, it doesn't, under 62, doesn't take out 62 round number high, but drops a point or two, then we're going to be looking at it completely differently. Now, here's the other thing. That was a Whole Foods. And it was very important that it did that today because it's been one of the leaders in the sector, one of the leaders in the whole retailing area. I mean, in fact, the retail, upscale organic foods and groceries, but it is retail. Now, here's another thing that I think is important. ODP. ODP is Office Depot, which is just, I mean, it was really considered dead. It was down in the, what was it, down in the 1.51 area. Back in August of 2012, had a huge spike to 6.10 in February of 2013, pulls back, holds a 9-period moving average. Now, this is telling us something. I think it's telling us something about the whole, as I say, in the retail area. This is now Office Depot. If this is moving so well, and if it's treating the weekly chart, the 9-period moving average, I don't know what that spike was. Must have been some kind of a rumor, maybe takeout or something, when it hit the 610 level back in the week of the 22nd of Feb. At that particular point, that pullback said, oh, boy, that's trouble. But no, it's worked its way higher. So I have to contend that with all these different aspects, with all these different groups rotating, that in fact we're looking at some of the areas that were really weak. Like, let's look at Staples. Staples had been terrible. Oh, look at that breakout today. This is leg D in the daily, but it's leg B in the weekly. I have to consider that this is the economy actually turning around. I just have to think that, I mean, Staples, office staples, equipment, etc., is doing nicely like this. So what does it say? It says that in the market itself, this rally could go for a little bit. Not only could it go for a little bit, but you could also be looking at a situation that says, within the context of sudden, very sharp pullbacks, and believe me, anything's today, I mean, we still got news to come out. My TV's off, I haven't got it on, so I have no idea what's going on in terms of the manufacturing of news and what's reported, etc. But so far, everything seems to be pointing up. This is really important that we're looking at. If I look at the retail, the RTH, the retail sector, had a big spike today. In the weekly, I'm going to be a little conservative and call this A, B, C, D. I'm calling this leg D in the weekly chart. Still G/C in the monthly going up to that very strong resistance area right there. You see it? We have circled it, and that's going to be very important. And even more important about this is how does it close today and the week? Because it had this single leg spike up and a pullback. I'm going to call this just for now, rather than F, I'm going to call it F/E, giving preference to the F as a continuation, a pattern of the recent rally. Now, this is going to be very important in my work. If, in fact, the retail sector continues high and breaks above 57, I would have to say 59. If in the next week and a half, the RTH, the Market Vectors Retail ETF, breaks above 59, that's a breakout in the monthly. If it gets repelled, you've got to watch it closely. There are a lot of support levels. Support level of 54.42, the low of the week of 11th of, no, that was last week. And then you got a major support at 53.92. No big deal, 3 points, less than 3 points. But if it does that, we've got to watch real closely. So let me sum up at this particular point what I wanted to do. I want you to just put back into context certain things. Because it's Larry's show, and Larry often shows the commodities, I wanted to show the wheat. Wheat is pulling back sharply. It almost looks like the euro here. Look, the wheat went to a peak F, pulling back from the doji candle where it retested the body, thin little body, long legs, and now it's pulling back. Wheat says on a short-term basis could pull back, but 673 in the December wheat, that's the major support. Now let's go to something else. Because I'm not sure where I've done my show in this and I can't remember how I've jumped around. Crude oil, the USO I use very often. Now, I'm sure that most traders would never just look at that. Question of the day, I'll look at that in a moment. If you look at the the United States Oil Fund, that's really important because unless crude oil is able to spike above the previous high of 37.59 and it's trading at 36.99 right now, it could be just stuck in this trading range. And that should help what? That should help the airlines. Look how this thing just bounces off everything. So I'm calling the airlines, I have to call this a new leg C. A, forget that. I'm calling that A. Right there. So this is going to be new A. Didn't break the trough there, so this is B, and this is C. So once again, we've got leg C in some sectors, and that says we should still go to a D before a major sell-off. So that means that the airlines have been on an absolute tear. Look at JetBlue. Wait, let me JetBlue. JetBlue made a peak E, holding very nicely in this high-level consolidation. But in the weekly chart, there again, you've got that cup. Patterns repeat over and over and over. Look at that cup formation. It says I'm attempting, I've broken all the left side previous resistances. I'm attempting to get back to the 7.28 high of the week of the 12th of April. I'm trading at 6.97. Not too far, but a big percentage move. That'll immediately take me to leg D in the monthly chart, and that makes a cup and a potential handle. Actually, it's more like a cup and ladle Chapman wave breakout. If at any point in this big move up, the left side high of 760 is taken out from way back in 2011, that'll be really important for JetBlue. So I wanted to go through a couple of things just to show you that there's, in the smorgasbord, in the complexity of the market, some things could be very, very simple. And one of them, I'm going to go back, I can't remember if I spoke about it in this show or my show, the volatility index down at 14.99. That is definitely saying buying pressure, intense buying pressure. Watch out. That buying pressure can keep up. Now, if by the end of the day, you never know on Wall Street and you never know in politics. Let's just imagine by the end of the day, best case scenario, then you get news. The market is already up 183 and the S&P is up 20. The Dow is up 183. Could you double again on all that good news? Or will they suddenly say, uh-oh, now we've got this. Now let's focus on the real problems. I don't know. We just don't know, do we? We've never been in this situation. Now that's the next thing is, when we're looking at this, does it say, okay, all the good news is out. We're up 183, but by the day's end, we're only going to be up 63 in the Dow, up 8.95 on the S&P cash. I don't know. We just don't know. It doesn't look like it right now, but you never know in this game. So you always have to have some stops ready. You got to be ready. But the weekly chart so far is saying that, I meant to show this the other day. Where did I put it? I hope it's here. Let me see if I've got it here. Yes. No. Yes. No. Yes. No. Oh, I'll find it. In one of my charts, I've done a sequential left side to right side of the cup formation, saying when the next, and it's really December. December, it says that the volatility, if this volatility index keeps declining here, stays low, then if it says late November, December might be when it breaks in the 22, 23 area. I'm not sure. We won't deal on that right now. I haven't got the chart up to show you. I like to demonstrate it visually, and I can't show it right now. So let me just go quickly to this area here. This is what I need to do. I want you to go to this chart here. This chart, I've shown it before. Let me make it a little smaller so that you can see what I'm looking at. Let me squash it a little bit. Let me squash it. And I'm going to say to you, if you were looking at this chart, if you're looking at Tiger TV, let me just go there so that we're all looking at apples to apples. I got some beautiful peaches. Peaches to peaches. The last period of peaches. Now, let me just do this, and I just have to get the sound down here. Whoops, not there, down there. That's it. All right, you're looking at Tiger TV. There's a break coming up. I want you to look at this picture. For those of you in the den, keep looking. And for those of you not in the den, take a visual of this. And I'll talk about it when we get back. I'll be back. Basil Chapman sitting in for Larry Pesavento. We're going to have our last segment coming up after this break, and then I'll look at for the den. We want to look at one or two charts for the den folks. We'll be back.
TFNN has just announced a special sale for 2 weeks only for the Gold Report to celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd. TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. I wanted to show this chart. Have a look. The price kept going up and up and up. One of these days I'll have time to go through all my microfiche and all those different charts and newspaper headlines from the 1930s and put it on top of each one of these peaks. You can imagine that was a real depression. That was the serious stuff. That was not, you get out of World War I. You have a worldwide flu epidemic, kills 20 million people. It just goes on and on and on. Things are looking just fantastic. And then what happens? What happens? You have the crash of 1929. And then all of a sudden you're coming out of it. So this is what's happening. Bad news. And look at the price. It goes up almost from 40 to 390, almost, what is that? It's almost a tenfold. What is it? What did we get there? To 195, sorry. 40 to 195. So that is just a huge increase. And we've got something very similar today. Look at this. Here's the monthly chart. With all the bad news from 2009, look what's going on. It just keeps going up and major pullback. Now we're at a peak D. Leg D, I should say, because we haven't got a peak just yet. This is where I've got to be a little bit careful on the Dow. It doesn't mean to say it's negative. Look, the stochastic's turning down. a lot of things, but the on-balance volume is still strong and the MACD's fast-moving average. So this is the period where you've got to be a little careful because of sector rotation as I see it. So I'm going to be watching this very closely. And meantime, back at the ranch, this is my friend from California. I'll have to just tell him that I can't speak to him. Call you back, Jay. There you are. So here we are, and I'm looking at what? High-grade copper. So we're just going to jump over to high-grade copper. HG, high-grade copper. It's in a trading range. It is not breaking down. It's not breaking out. But if high-grade copper at any point in the next 6 weeks to 7 weeks, 6 weeks to 8 weeks really, can finally, instead of breaking down under 3.1 or $3 that it loves to do, can actually start to quietly move up to the 3.4 area, I think that'll say worldwide change has been taking place and that jobs will be coming back slowly but surely. Someone mentioned the EWG, which is the German, oh man, I had these all notated. They're not notated now. Let's look at the EWU, which is Great Britain. Great Britain leg E up in the monthly chart on this, but this is not the FTSE. This is the ETF that tracks the London market. So it's not at all-time highs. I'm sure I need to look at the FTSE to see exactly what's going on. But this chart is saying MACD is good. Stochastic's a little bit weak in the monthly chart. So we've got to keep an eye. Not everything is quite as kosher as everybody thinks right now. There's a rotation going on. There's a lot of buying. But my belief is that money will eventually flow out of bonds and into the Dow and into the S&P, into the Qs, into the IPOs. There's a new ETF coming out on IPOs. All of that's important for the next big mega move in this mega bull market. Meantime, we've got to be prepared that at any point you could start to have a consolidation, and a rotation has been going on. So we're about to close out for the day. Let me just give my numbers that I'd be looking at. Love the action so far today. This is leg B in the Dow. Any sharp pullback that holds 15,100 to 15,050, not breaking, break 15,000, I've got to be a little bit careful. But any sudden pullback says, okay, we could still go to leg C above whatever the high is on peak B, if that's, say, today, and there's a little dip tomorrow under 15,374.15. That'll be the start of a pullback, and then you get leg B. But if leg B extends into Thursday, that's really very positive, unless there's just some sudden, really bad news. So meantime, back at the ranch, the Dow is in a trading range at this point. It's gone back into the up channel support zone, and that's very positive. So I'm looking at this and I'm saying selective longs, fabulous. Still stop the breaking down. So